Everybody, today we're talking Datadog. I'm going to tell you 3 things I like about the stock. We're going to do an earnings preview, and then at the end of the video, I'm going to share some potential buy prices based on low, medium, and high scenarios. As always, you know I like to share my portfolio in these videos so you can watch along the way as I build this $1 million portfolio. And you can also see whether I own the stocks that I'm talking about or not. So we're currently at a value of $76,124. We started the portfolio February 15th, 2022. We are down $5,900 and we have put in about $82,000. The last week was pretty good. We were up $1,800. I do a portfolio review every single week on Friday, so make sure you like these videos and subscribe to the channel so you never miss one of those updates. But right here, here's the portfolio, and what we are focusing on today is Datadog. We're talking Datadog. It's a $8,421 position in the portfolio. Datadog year to date is down 37%. A lot of stocks are down, and the question is it a buy or a sell at these levels? All right, let's jump in and talk about upcoming earnings. They report on August 4th pre-market. I think that's Thursday, so I'll definitely be covering earnings on this channel. And the normalized or the adjusted earnings per share estimate is 15 cents. They're expected to have a GAAP EPS of negative 7 cents and then revenue of $381.28 million for the quarter. In their last quarter, they beat, that was reported in May, they beat on adjusted EPS, they beat on GAAP EPS, they beat on revenue. And if we look, I mean, this has been an extremely strong company. They have beaten on earnings and revenue every single quarter that they've reported. Okay, let's cover a few things from the company's last earnings reports that we're just gonna keep an eye on for this upcoming earnings. First of all, they grew revenue at 83% year over year, 363 million. That was just insane. Do not expect that type of growth to keep up. I just expect this company to be in the 40% plus, for a while moving forward. They had strong growth of large customers. So this is one thing I like about the company. I've talked about how I don't like products, for example, Palantir, that don't have a lot of customers. Datadog has 2,250 $100,000 plus annual recurring revenue customers, which was up from 1,400 a year ago. So that is growing very strong. And then they launched application security monitoring product, which is a brand new product and module that customers can sign up for. And their CEO in the opening remarks said, "We continue to see customers of all sizes in all industries progressing along their digital transformation cloud migration journeys. Companies are increasingly relying on software and cloud services to drive revenue, competitive advantage, and positive business outcomes. By using our unified cloud-native end-to-end observability and security platform, our customers can understand, manage, and drive value from their exponentially growing ephemeral cloud environments." So Datadog brings everything together, and it's a single point that people can kind of observe, or a command center for all of these different cloud operations that they have going on. Okay, we're about to jump into this a little bit more, the depth of their partnership with Microsoft. But they had a note in here, partnered with Microsoft for Azure Cloud Adoption Framework. This partnership adds Datadog's leading monitoring and security capabilities to Microsoft's roadmap for successful cloud implementations. This is the presentation that they came out with in May. We can see that 78% revenue growth, 19% non-GAAP operating margin, 28% free cash flow margin, 130% dollar-based net retention rate for 19 consecutive quarters. That is the amount of money that customers on average spend 1 year after the next. So they're spending on average 30% more in the following year than they did the previous year. 1.7 billion in cash. We talked about that. 81% of customers are using 2+ products. 35 is using 4+ products, and 12% are using 6+ products. So as they release more products and more customers, use more products, A, they're stickier, they stay around longer, but B, that's how that net dollar expansion rate continues to either stay the same or increase a little bit, is because more customers are able to spend more and grow more on the platform. And then here are their 14 different products, everything from infrastructure to log management, application performance monitoring, network monitoring, observability, database monitoring, cloud security posture management, application security monitoring, all kinds of different stuff. They were named a leader in the 2021 Gartner Magic Quadrant for application performance monitoring. Okay, and here's what I really love to see. Sales and marketing margin, meaning they're having to spend less money on sales and marketing as they grow, which is how they're going to get more profitable. One way they're going to get more profitable moving forward. So in FY17, they weren't very well known. They didn't have a lot of these deep partnerships, and they had to spend 43% of revenue on marketing. Then 44%, 39% in FY19, 31% in FY20, and 25% in FY21. Now, part of that is just because revenue grew so fast, and so this might tick up a little bit. But the point is that major trend is down, right? So I want to see them continue to be under 30% and eventually get, stay at 25% or even lower. Okay, another big thing that some of these fast-growing tech companies do is they issue a lot of shares. Datadog is not doing that. So for the second quarter of 2022, they're expected to have 347 million average shares outstanding. And then by the end of the year, they're expecting 349. That's only 2 million more shares in the next 2 quarters. And so that's less than 1% dilution. I'm totally fine with that. And this is an incredibly efficient company. This is a expert interview. This is somebody that used to work at Microsoft in a high-level position. And they're talking about the value of the Datadog software. So this is what the experts say. I think you're touching on a key point, which is Datadog is a very well-known service. It's very well loved. It integrates with a lot of our partners. Something unique that I personally found interesting about Datadog was beyond just visibility, they also provide actions and intelligence. It's not just a one-way relationship with the enterprise customer. You have a dashboard that lets you know what's going on. You can automatically spin up VNS as needed. You can track dependencies and you can act on observations that Datadog is providing you with. I think that's unique. That's a really valuable service that we could bring to our existing customer base. This is talking about the existing Microsoft Azure customers. This is why Microsoft saw it so valuable to have a deep partnership with Datadog. I can hypothesize that that's why Microsoft would choose to prioritize Datadog. So that's that kind of depth in that Microsoft Azure relationship. And that's why Datadog could have a long trajectory for growth ahead. We can build out a potential 10-year scenario, right? And this is where there's a lot of assumptions, a lot of guesses. We have no idea what's really going to happen. But I'm just using this for reference. And so I built a low, a medium, and a high scenario. For low, we did revenue growth of 25%. Medium was 30, high was 35. Profit margin, which is very low right now, but as this company scales, I think it can get a lot higher. And so 25, 28, and 31 might be high for 10 years from now, but I'm pretty confident they can get there over time. And then free cash flow margin, 26%, 29, and 32%. And then PE, it's at 15,517. So if anybody looks at that from like a PE value perspective, it's like, oh man, I would never buy this stock. Well, we're taking it down to 30, 33, and 36. And this is 10 years out. And then a price to free cash flow of 32, 35, and 38. Right now it's at 95. So our desired annual return in all 3 situations was 13%. Let's hit analyze. And this is just going to say, here are the prices you would be willing to buy under if you believe these assumptions in any of these lines. And so there we go. On the low side, it is showing as overvalued from both a multiple of earnings and a multiple of discounted cash flow. If you believe this low scenario, you wouldn't want to buy it any higher than 86 or 95. And so, that's 10, 15% lower from here. So not that crazy amount lower. But if you believe these mid or high situations, then according to this model, this stock would be undervalued right now, and it would be one that was worth doing more research or considering buying. So in the mid scenario for PE, it comes out at 152 and then a high of 260. And this is about 10 years, right? But I think they have the potential to grow for 10, 15, 20, and 25 years. And that doesn't mean I'm going to blindly just own the stock, but the market is there, right? And just to give you an idea of what that could look like, this is Seeking Alpha, and it just has analyst expectations for revenue out to 2031. And just to give you an idea, right, with 57% growth this year, 38, 41, 56, 13, 27, 25, 22, 18, and 15. So not far off that number if you average it out to 25 to 35% annually. You'd only be looking at $15 billion in revenue in 2031. It is certainly possible that they do that, and it is certainly possible that they have a market for 30 billion, 40 billion, 50 billion in revenue in years 2040, 2045, and beyond. So the point is that there is growth potential ahead. I mean, if we look at 15 billion in revenue and you look at Google, well, Google this year is expected to do 290 billion in revenue. And out to 2031, 806 billion in revenue. So to think it's impossible for Datadog to get to 30 or 40 or 50 if they do things right and execute, I just think it is possible for that. And so that's how I'm investing and why I own Datadog. Would love to know how you feel in the comments. Am I crazy? Do you own Datadog? Do you not own Datadog? Do you have a stock you want me to review? Let me know in the comments. And as always, if you want to support the channel, just like and subscribe to the channel. It helps me out a ton. Thanks.